is confirming the bull market. It's now, what do I do? Well, actually, the best thing psychologically is get in because it's going to continue up. It may go sideways, maybe the rest of the year, as I just outlined. Probably not. I think gold will probably make a break to the upside in the fall. August is usually the lowest prices for gold historically. Doesn't guarantee this year. But the main thing is to start a savings plan in real metal, in real money. And that's easily accomplished in silver, not so easily in gold, although there are electronic forms of gold, which I wouldn't really recommend. I mean, there are, different platforms that digitize gold and silver. I would say that's a tool you could use in the future, but I wouldn't consider it to be a primary investment. Primary investments, what you hold in your hand.
David Morgan, a respected silver market analyst and publisher of the Morgan Report, sees significant opportunity ahead for precious metals investors. Morgan anticipates gold will experience a breakout this fall, noting that August typically represents seasonal lows for the metal. His investment philosophy centers on building a foundation in physical silver, which he describes as real money, while viewing digital metals platforms as useful but secondary tools. The current market dynamics present an interesting backdrop for Morgan's outlook. Despite rising selling pressure on the US dollar and mixed Personal Consumption Expenditures (PCE) data, gold prices extended their decline, reflecting cautious market sentiment and reduced safe haven demand. Silver's performance profile has evolved significantly over recent years. While traditionally viewed as a defensive asset, silver has demonstrated dual characteristics over the past 5 years, functioning both as a safe haven during market turbulence and as a strong performer that has at times rivaled equity returns. This versatility is enhanced by growing technological demand, which continues to expand silver's future potential beyond its monetary and investment roles. Drawing from historical precedent, Morgan recalls silver's superior performance relative to gold during multiple periods in the last bull market cycle, before reaching its peak in 2011. That period was followed by an extended bear phase that lasted several years. With what appears to be a new bull market now emerging, Morgan believes the current moment presents both psychological and strategic advantages for investors looking to establish positions. Current market positioning supports this thesis. Silver is trading at $35.75 per troy ounce, representing a substantial 23.72% gain since the beginning of the year. This performance comes as many market participants believe we remain in the early stages of the current precious metals cycle. Historical patterns suggest that silver typically outperforms gold during the second phase of bull markets. As the gold bull market continues to mature and develop, silver is expected to begin demonstrating its characteristic outperformance relative to its precious metals counterpart. Before we begin, make sure to like, share, and subscribe. 97.4% of viewers haven't subscribed. Join the 2.6% who have by clicking that button and turning on notifications.
Well, I wrote the 10 Rules of Silver Investing over 20 years ago. And it's pretty easy to find. I actually made a couple of videos on it, but the original document is out there for free for everybody. So if you just use a search engine, 10 Rules of Silver Investing, David Morgan, you'll find it. But the main rule is basically to stay away from rare coins unless that's your specialty, and buy dollar cost average over time. Before you ask the question, I thought about it for that answer, which is my best answer. The other answer would be, if you're new, start small. That's in the 10 rules, and get some though. So in other words, if you're looking at it now and you're just kind of waking up to the precious metal story, or, fiat empire, what happens at the age of these demises with fiat currency, and you say, oh, geez, I should have bought silver when it was at 20, or I should have bought gold when it was at 2000.
Yeah.
And looking backwards, I could have said I should have bought Bitcoin when it was $100, right? I mean, we all could look back and say, but ifs and buts for candy and nuts, it'd be Christmas every day. You haven't heard that saying in a while.
No.
So the deal is you got to have some. You've got to have some real money, or you could potentially have a hardship. And the money metals aren't going to save you, but they could save your financial future, depending on where you start. So I would say just jump in, but don't jump in with everything. People hear the story, and this, as you know, we had a huge bear market. We went up 11 years, couldn't do any wrong. The stocks did well, the metals did well, silver outperformed gold several of those years. And then we hit the peak in 2011 with silver last day of April or first day of May 2011. 4 months later, gold peaked. And from that point, it's been a pretty long ride going down and back up and kind of sideways. So the point being is that now that the market has reestablished itself in a bull market, and platinum has confirmed the bull market, silver's confirming the bull market, it's now, what do I do? Well, actually, the best thing psychologically is get in because it's going to continue up. It may go sideways, maybe the rest of the year, as I just outlined. Probably not. I think gold will probably make a break to the upside in the fall. August is usually the lowest prices for gold historically. Doesn't guarantee this year. But the main thing is to start a savings plan in real metal, in real money. And that's easily accomplished in silver, not so easily in gold, although, there are electronic forms of gold, which I wouldn't really recommend. I mean, there are, different platforms that digitize gold and silver. I would say that's a tool you could use in the future, but I wouldn't consider it to be a primary investment. Primary investments, which hold. Well, I really think that it has a lot to do with the part of the market that we don't talk about a lot, although I do, and you and I have had these conversations privately. But it's the idea that freedom and honest money basically go hand in hand. I mean, the first casualty of a rigged monetary system is that you lose trust. In a genuinely free society, individuals make choices based on trust, and that trust is the value of their labor and their savings and their investment, and it will hold steady over time. And if it doesn't, in a rigged monetary system, it breaks that trust. And when more and more people realize that, more and more people become something they can trust. Well, gold and silver have been trusted for, you can pick your number, 2,500 years, some say 5,000. I mean, certainly there's more trust in these pieces of metal than there has been in an edict by mankind, no matter what the empire ruling at the time is. And many of the empires use precious metal. And then the Roman Empire. And then, of course, they started to debase the currency. They would take in all the silver and then put in gross metal with it and remint it and pretend it had the same value as the original. Of course, it didn't. Right. So a rigged monetary system breaks that whole trust.
David Morgan's summer forecast for gold appears to be playing out as anticipated. Morgan attributes gold's restrained performance to ongoing market intervention, suggesting that despite significant geopolitical tensions that would normally fuel demand for safe haven assets, gold hasn't experienced the surge that many market observers expected. This intervention dynamic appears to be constraining gold's upward momentum even in the face of traditional catalysts. Recent market action reinforces this sideways pattern. Gold prices declined as news of a ceasefire between Iran and Israel reduced safe haven demand among investors. The easing of tensions in this key geopolitical flashpoint prompted some investors to reduce their exposure to defensive assets, contributing to gold's retreat from recent levels. The technical picture reflects this cautious market sentiment. Spot gold slipped 0.3% to $3,314.45 per ounce after hitting a 2-week low in the previous trading session. U.S. gold futures followed a similar trajectory, declining 0.2% to $3,328.10 per ounce. These movements occurred as investors positioned themselves cautiously ahead of key U.S. economic data releases that could provide further direction for precious metals markets. Let's get back to the interview.
If I recall correctly, I've been saying, about 2 months ago, I called gold had basically peaked for a while, and that I saw it going sideways through the summer and possibly till the end of the year. And so far, that's been proven right. I still see it that way. And of course, people will say, well, wait a minute, this war thing in the Middle East and, the Ukraine thing kind of in the background now with going on with Israel and Iran. And there's lots of reasons to think that the precious metal should move. Oil should be moving like crazy, which it has moved up, but it also sold off very recently. Point being is that these markets are more or less managed, believe it or not. They don't move things that you would expect. And when you see, this massive back and forth in the Middle East, and you would think, that's good for a $50 price piece in gold minimum, maybe 100.
Right.
And there's nothing incorrect with that thing. It's just I've been around these markets, as you well know, over 4 decades, and I've seen this happen time and time again, where the expectations are not met, and then you've got to ask why. And that goes into you got to put a hat on and all that stuff, which I have one here, but I'm not sure I'll put it on. Market alone, I'd say the bond market, that's always been my biggest concern, but I think it's bigger than that in a way because it's the economy. I mean, the financial markets are markets, but the economy is what you and I do to survive or to have a good life. And that's, shelter, transportation, communication, what we get to eat, what choices we have. And the whole economy on a global basis is basically contracting, which means there's less stuff while we're increasing the population. So more people and less stuff. That means generally you're going to have a lower living standard across the board. That doesn't mean there won't be some super rich that are having better lifestyle, but on average, everyone's lifestyle is going to go down.
Right.
And then you're going to get in a situation where you start to look more and more at, what the true values are. In other words, getting, let's say, not being able to eat the diet you want because you can't afford it, or getting a secondhand car that really needs to be sold off and purchase a new one, but you can't make the payment. And when central banks manipulate interest rates and take currency and quietly devalue it over time until it gets to the point where most people don't, or do recognize it, that, oh my goodness, groceries are costing me more every time I go. And that erosion affects everything: savings account, medical bills, housing prices. It reaches into how people actually live. So I think that's something that, you and I have taught for a long time. Many of us do more than just extol the virtues of having real money. There is that aspect to it that's all important, and that is we need to have a system where we can trust each other. Let's just go to the war for a minute, and I really don't want to talk about it much. It's your show. I'll answer any question you can give me. But, you sign a treaty, and you trust the other party to adhere to it. And if they don't, then that trust is broken.
Right.
And I have a more or less theory. Robert Prechter has written a couple of books on socioeconomics, and he's the only one I know of. I'm sure there's probably others that have really documented that there's a direct correlation between the degradation of the money, the devaluation of a currency, and the degradation of society at large. So the worse the money system gets debased, the worse the moral structure of the society. That's what I would say, probably in a couple sentences, the most important thing.
Gold and silver continue to reflect the broader economic and geopolitical landscape, with gold showing near-term weakness despite ongoing global tensions. Silver, meanwhile, is gaining momentum as both an industrial and investment asset, especially in a recovering bull market. As inflation concerns persist and central banks maintain a strong presence in financial markets, both metals remain critical stores of value. For long-term investors, silver may now offer greater upside potential, while gold continues to serve as a foundation of monetary security. Do you think silver is set to outperform gold in this bull market? Share your thoughts in the comments below. And don't forget, 97.4% of viewers haven't subscribed. Join the 2.6% who have by hitting that subscribe button and turning on the bell icon so you never miss an update. Thanks for watching.